Wait, what did you just hear? Global banks are actually trading the Iraqi dinar? Let that sink in. For years, people have talked, speculated, and even argued about whether this would ever happen. And now, in 2025, it's finally real. We're not talking about rumors or whispers from forums. We're talking about real transactions inside real banks, using real trading systems that handle billions every single day. This is a financial moment many thought would never come, but here it is, right before our eyes. Today, we're diving deep into what this new development means for Iraq, for global investors, and for everyone who has been watching the dinar's journey from restricted currency to recognized global player. Stay till the end, because by the time you finish watching this, you'll understand why this moment could quietly reshape the Middle East's financial landscape and possibly rewrite the future of global trade. For over 20 years, the Iraqi dinar was a restricted currency, locked inside Iraq's borders and off limits to most of the world's banking systems. International banks wouldn't touch it. You couldn't just walk into your local branch and exchange your US dollars or euros for dinars. If you wanted it, you had to find specific dealers or online exchange services, often with high spreads and uncertain guarantees. But that chapter is closing fast. Over the past several months, several major European and Asian banks have begun including the Iraqi dinar in their foreign exchange trading systems. It's appearing right alongside major currencies like the US dollar, euro, and yen. This isn't a test run. These are live trading pairs, active, tracked, and verified on legitimate financial platforms. For a nation that has worked tirelessly to rebuild its economy and stabilize its institutions, this marks one of the most powerful turning points in Iraq's modern financial history. So why is this such a big deal? It's because being traded by global banks changes everything. When a currency is restricted, its movement is limited, and its value is tightly controlled. It doesn't participate in natural market dynamics, meaning it can't gain credibility or liquidity. But once banks start trading it freely, it joins the open world of global finance. That means investors, corporations, and even other governments can access it through legitimate financial systems. This boosts trust, visibility, and real-world demand. Think about it like this: for decades, the dinar was in a financial cage. Now, those bars are starting to bend, and soon they might break completely. When currencies become globally traded, their markets expand exponentially, leading to more stability, better liquidity, and often long-term appreciation in value. The Iraqi dinar is entering that stage right now, and it's happening faster than most experts predicted. Let's break down who's actually leading this transformation. According to new banking from 2024 and early 2025, the first movers were several major banks in Europe, especially those with existing oil trade or reconstruction links in Iraq. Shortly after, Asian institutions followed, particularly banks from countries with heavy investment in energy, logistics, and construction projects across the Middle East. These financial giants didn't just decide overnight to include the dinar. Setting up trading systems for a new currency requires months, sometimes years, of planning, integration, and regulatory approval. That means this shift has been in motion behind the scenes for quite some time. The quiet groundwork is now becoming visible, and the result is the inclusion of the Iraqi dinar in some of the same global trading platforms used by the biggest currencies on Earth. So, what made this possible now? Several major factors converged. First, Iraq's economy is stronger today than it has been in decades. Oil production answer at consistent high levels, providing the government with predictable revenue. Second, Iraq's internal banking reforms have modernized its systems, making transactions more transparent and compliant with international standards. Third, some restrictions and sanctions that previously limited foreign banks from touching the dinar have been eased or lifted. Combine these with a growing wave of international investment in Iraq's infrastructure, and you get a perfect recipe for financial integration. Global banks saw this momentum and decided the time was right. And when big banks move, they don't gamble, they calculate. This suggests deep confidence in Iraq's stability and the dinar's long-term potential. But let's make something clear, this isn't an overnight event. When a currency begins to be traded globally, it's not like flipping a light switch. Banks must first establish secure relationships with Iraq's central bank, implement anti-money laundering systems, and train their staff on handling transactions involving a previously restricted currency. There are risk controls, trading limits, and legal frameworks that must be built before the first transaction ever takes place. The fact that we're seeing actual trading activity right now means these preparations have already been completed. For years, this work was happening quietly in the background. Now it's coming to light. And that tells us something huge. Global financial institutions see the Iraqi dinar not as a speculative gamble, but as a legitimate part of the future of international trade. Now, let's talk about what happens when a currency becomes globally traded. Typically, 3 things follow. First, the exchange rate stabilizes. Instead of erratic highs and lows, the market smooths out as liquidity increases. Second, trading volumes surge, meaning there are more buyers and sellers every day. This creates confidence and tighter pricing. Third, over time, the currency often appreciates, gradually, not dramatically, based on real economic fundamentals. For the Iraqi dinar, we're already seeing early signs of all 3. Trading volume has jumped, volatility has eased, and bid-ask spreads, the gap between buy and sell prices, have narrowed. That's a technical but important signal that the dinar is being viewed as a credible and liquid asset. It's not just Iraq's national currency anymore, it's becoming a participant in the global marketplace. But here's where many people misunderstand the story. For years, some investors believed in an overnight revaluation, the idea that one day, the dinar would suddenly skyrocket in value and make holders instantly wealthy. That's not how modern currency markets work. In reality, major revaluations of that kind are almost unheard of. What we're seeing instead is something far more meaningful, a steady, organic increase in global trust and accessibility. When a currency earns credibility step by step, its foundation becomes unshakable. This is the beginning of that journey for Iraq. Instead of speculation driving price, now it's international trade, investment, and real economic progress doing the heavy lifting. This kind of growth is slower but much more sustainable. And that's exactly what serious investors prefer to see. Let's look at the economic engine behind this shift. Iraq's oil sector continues to power the nation's revenue streams, but there's a growing effort to diversify beyond energy. New projects in agriculture, manufacturing, and digital technology are taking shape. International firms are setting up partnerships and local operations. The more Iraq expands its economy, the stronger the case becomes for a convertible, freely traded currency. Businesses need reliable ways to pay suppliers, contractors, and employees across borders. That's why global banks are stepping in to meet this growing need. By integrating the dinar into their trading systems, they're paving the way for a more open, accessible Iraqi economy. This is how nations evolve from restrict to respected players in the world of global finance. To appreciate the magnitude of this moment, you have to remember where Iraq started. In the years after conflict and sanctions, its financial system was nearly isolated. Confidence was low, inflation was high, and few outside institutions were willing to engage. But look at the progress now. Stable reserves, improved transparency, and strong oversight from the Central Bank of Iraq. Step by step, reforms have rebuilt trust. Each new measure, whether it's compliance upgrades, digital banking integration, or tighter fiscal management, has brought Iraq closer to where it stands today, on the threshold of global financial recognition. The inclusion of the dinar in bank trading systems isn't just a financial headline. It's the result of years of resilience and reform. Here's something most people don't realize: when banks begin trading a currency, it's not just about buying and selling. It's also about confidence, reputation, and long-term expectation. Banks don't waste resources setting up trading platforms for currencies they expect to collapse. They do it for currencies they believe will grow stronger, become more liquid, and integrate further into the global economy. So the message here is clear: Major financial institutions are betting on Iraq's stability and the dinar's endurance. They're not chasing hype, they're investing in progress, and that tells us far more about the currency's future than any rumor or prediction ever could. Let's bring this closer to what it means for everyday people, especially those holding dinars right now. Increased international trading means easier access, better rates, and more reliable conversions. Businesses dealing with Iraq will benefit from smoother transactions. Investors will gain more transparency and less risk. And over time, as the dinar's demand increases, so does its potential value. But this is not a get-rich-quick story, it's a long-term economic transformation. Those who understand that difference will be the ones who benefit the most. It's about patience, not unrealistic expectations, not instant miracles. In real-world terms, several European banks are now offering dinar exchange services directly to corporate clients. Asian financial hubs are listing the dinar on their electronic trading boards. Some institutions have even begun experimenting with dinar-denominated accounts and investment products, something that would have been unthinkable just a few years ago. Each of these steps deepens the currency's footprint in international finance. The more that happens, the harder it becomes to reverse. This is what financial legitimacy looks like. The dinar isn't a fringe currency anymore, it's gaining a seat at the global table. Now, let's be realistic, no currency's journey is without challenges. Iraq still faces political tensions, economic dependency on oil, and regional instability. But the direction is positive. Transparency is improving, trade is expanding, and confidence is growing. Global recognition doesn't happen overnight. But once it starts, it rarely goes backward. The key for Iraq now is to maintain reform momentum, encourage foreign investment, and continue modernizing its institutions. If that happens, the dinar's credibility will only strengthen further. Every successful trade, every new partnership, and every positive headline adds one more layer of trust to its foundation. This entire transformation also reflects a larger trend in global economics. Emerging markets are becoming the new centers of growth. Investors and banks alike are searching for opportunities beyond the traditional giants like the US and Europe. Iraq, with its natural resources and strategic location, fits perfectly into this picture. A globally traded dinar opens the door for new partnerships, new industries, and potentially new prosperity. The world is watching Iraq take its next step, and this time, it's not speculation. It's tangible progress unfolding in real time. Let's address one final point: misinformation. Whenever currencies like the dinar gain attention, rumors spread, claims of secret revaluations, overnight windfalls, or hidden government deals. But here's the truth: what's happening right now is completely transparent and logical. It's not a secret agenda, it's the natural outcome of years of reform and market evolution. The banks are not acting on rumors, they're acting on data. They see growth, stability, and opportunity, and they're positioning themselves early. That's not manipulation, it's strategy. The more you understand this process, the more you'll see that the dinar's rise is being built on solid, visible progress. So, what happens next? As more banks adopt the dinar into their trading systems, we'll likely see expanding participation from North American institutions and even broader financial integration. Over time, this could mean full global convertibility, direct currency swaps, and easier access for international investors. If Iraq continues strengthening its economy, the dinar's long-term value could reflect that growth. This isn't just Iraq's story. It's a case study in how nations can rise from restriction to recognition. And we're watching that transformation happen right now, live in 2025. So here's the bottom line: from restricted to global, the Iraqi dinar's shock and new status is a milestone years in the making. This is not hype, it's history unfolding. The world's banks have opened their doors, and Iraq's currency is finally stepping into the spotlight. Whether you're an investor, a business owner, or simply someone fascinated by global economics, this is the moment to pay attention. Because this story isn't over. It's just beginning. If you found this update helpful, hit that like button, drop your thoughts in the comments, And don't forget to subscribe to Iraqi Dinar News for the latest updates and in-depth analysis as the story develops. The Dinar's global chapter has officially begun, and trust me, you'll want to see where it goes next.